Cash Money.
Here we're looking at Nike as a trading situation where we could possibly trade a sort of a long-term-ish, day-by-day trading, which you'll be investing. But this Nike, I wouldn't suggest investing in that situation. I'll probably look up some other stocks that we could invest in, sort of like on a 3-month basis. When you see, like Wayfair would probably be a good one. Like I said, we'll go back to that one. We'll talk about how to invest in these trends and shit when it comes to, because I know you would probably like to invest in just these little ups and down situations. But me, even though I personally wouldn't suggest doing day trading, but maybe a long-term up and down situation, that would be possible. Where these little red bars would actually be more like 2 or 3 days in a row. This little bar right here might be a day, so you're kind of investing in a longer trend situation instead of just investing like something that might go up and down 3 times in a matter of minutes. So it'll probably be just a little bit safer doing that as well, but we'll look at that later. I think Wayfair might be a very good one for doing that. So we're going to go ahead and keep running right through this here. So let's go ahead and go up to that 5-year range right now, where we're talking about how to invest in a company or a stock market long-term situation so that we can make a good income for ourselves and possibly for your children. Alright, well, I gotta bring up a calculator right now. Let's go ahead and bring up a calculator at this moment here. Or maybe a percentage calculator. Alright, so let's go ahead and bring up a regular calculator. Let's say we're doing a 10% investment strategy. We're going to be saving that 10% for a whole year, then investing it into a stock market. So let's go ahead and let's say that John Doe is making $200 a week. He saves 10% of that money, he puts it in the bank. So let's say he's making $200 a week, and he's taking out 10% of that money, which is $20. So let's go ahead and just to go the percentage calculator real quick so we know that we're doing this 100%. So we can make sure that he's making $200 a week net profit, and let me see here. Yeah, I like to go to this one. This is my special favorite one I like to go to. I sell stuff on eBay, so I always tend to look up money, like how much I sell it for and how much, whatever, you know. Okay, let's go ahead and do 10%. Let it load up. Constantly can't stand it loading up. Alright, 10% of 200 is obviously $20. Alright, so he's investing $20. He's putting $20 a week whenever he gets paid. He's putting that in his bank. Let's say he could put it in his savings account, or let's say he adds it to his PayPal account, because PayPal's debit card, this is why I was talking about PayPal earlier. PayPal's debit card also it has a little savings area where they give you like a 5% return on your money. That's pretty cool. Not too many people know about that. But if you get the PayPal debit card, when you add your money from the PayPal onto your debit card, you can also add that into your savings account so you can save up for a certain amount of money. Let's say if he does that, he can put that in there and save up for how much it would cost each year so that he can take the money out and invest into a stock. But let's just say you put it into a bank account, since most stockbrokers would rather have a bank account instead of a debit card, obviously. So let's go ahead and just talk about that, the bank issue. So most banks, I guess, would be around 5% return on their money, but we're not talking about return, even though if you're not interested in investing in stocks, just put your money in the bank. You're getting some sort of a return on your money, so it's better than nothing, I guess. So it takes us $20 a week. There's 52 weeks in a month, or in a year, I'm sorry. So we're gonna do 52. Where's the pay? Alright. Let's go to a calculator again here. I'm sorry. Completely lost now. Alright. Let's just go ahead and do this here. I'm sorry. No, wait. No, I don't think I'm able to do it. I'm completely misspelling right now. Let me see it. I'm sorry, I'm completely misspelling right now. Alright. Let's go ahead and look up the calculator equivalent of what that might be here. If we can get it to damn run here. Alright. Okay. He's saving $20 a week for a whole year, which is, I think there's 52 weeks in a year, so let's go ahead and times that by 52. That's $1,400 each year. He's putting into a bank, so he's saving it every year until 1 year passes. Let's say he says, I'm gonna go ahead and buy the Nike. So right now Nike would be, let's say around down here. This is 2011 to 2016. So the Nike would be down here, somewhere in this range. So let's just say he bought it, instead of buying it right down here, right down at the bottom like most people would do, let's just put it up a little bit, okay? Let's say he didn't buy it right down here in April. He bought it up here in May. So that's $20.50. Let's say he invested only half of that money, and maybe he wanted to take the other half and invest in it somewhere else. Well, yeah, he could do that, but let's just go ahead and pretend that he's investing all this money. Maybe we'll do another video on that. So let's say he's just investing all that $140 and into the Nike stock market. He's going to do a 5-year deal. Obviously, in 5 years, if he would have just kept that money, he would have around 5,000 or so. So let's see how much extra he would might have made. So say it's $20.50 or so. So divided by $20, or was it $20.50? Or was it 25? I can't remember. I'm sorry. Let's just go right here one more time. Yeah, $20.50. So that would equal 50. So he would actually have 50 shares right there. We're going to go ahead and put that into our little notebook here. 50 shares. Let's go ahead. I think we got enough to do one more. And this would be, let's say, April 2011. So once 2012 comes, the next year, let's say it's somewhere around this area. Let's say he invests again. That's $24.58. So he has $1,040 divided into, I think it was $24.80. Let's go ahead and do this here. I'm sorry. Yeah, it's like, let's say, yeah, it was $24 and let's just go 58 cents. I'm sorry, I need to start remembering things here. Yeah, it was $24.80 or whatever, 50 cents was it? Let's just go ahead and do 80 cents, it's all good. That's 41 shares that you would have bought. Okay. 41. Alright, we're going to go ahead and come back to the part 3 where we're going to go ahead and keep equaling this all up.